From Harris Studios, this is Accounting for Tomorrow, an accounting and advisory services podcast for community leaders with a passion for change, who are ready to look past the numbers and ensure that today's planning efforts create success for tomorrow. Well, thanks for joining us. I'm very excited about the topic we have today, the Corporate Transparency Act. We've got two guests with me to talk about what we need to do to comply with this. First, we have David Hutchison, a partner with me at Harris and in our tax department. And then we have Brittany Mergan with CTA Compliance, the provider that is really going to be our experts and help us and all of our clients comply with CTA. So just to kind of get going here, let's just first start. There's been a lot in the news over the last 6 to 12 months, maybe even longer, about CTA or Corporate Transparency Act. Just give us a little 30-second, what is it and why was it enacted?
CTA is Corporate Transparency Act is just a new law that went into effect 1/1/24. Basically, it's related to what Congress thinks is a lot of money laundering and a lack of understanding all the different types of entities, in particular, probably LLCs more than anything else. And there's maybe a lot of shifting of money and assets that aren't tracked. So it's requiring a registration to get all of those entities registered and tracked, and a location within the United States and who the real owners are of those companies.
So Brittany, can you give us an update of what the current status is? Because I get a lot of people asking me like they're going to overturn it or you don't have to do it now. What is currently the status of the Corporate Transparency Act?
In March, there was a decision by a federal district court in Alabama that did rule CTA, which requires the BOI reporting, as unconstitutional. But the U.S. Department of Justice did file an appeal of that decision on March 11th. So that's currently in appeals in that Alabama court. Everyone else is still subject to BOI.
And so can you give me a definition of what BOI is?
Yes. BOI is the Beneficial Ownership Information, and it's actually the BOI report, so Beneficial Ownership Information Report. That is a report that is required to be filed under CTA to FinCEN, which is the Financial Crimes Enforcement Network, through the U.S. Department of Treasury.
Okay. All right. That's a lot of government is what that is. David, you could highlight for us, who is FinCEN, right? It's not the IRS, so which is what we usually deal with. But what is FinCEN? What's their role in this? And what are people reporting?
That's a good question. And there's a lot of confusion between who they really are and is this really a scam to get information and so forth. But FinCEN is actually a branch under the U.S. Treasury Department, just like the Internal Revenue Service. Their resources are probably a lot more limited than the IRS. As you can see, I think the easiest way to explain the overlap is that IRS handles the income tax reporting. FinCEN is more financial crimes, but they have to follow the money and the assets. And so the only way to do that is to use resources like the Internal Revenue Service. For example, most of our clients are familiar with Schedule B, Form 1040, where you have the top of the form, interest income, the second part of the form, dividends, and then below that, there's some questions you're supposed to answer, and they have to do with, hey, do you have any foreign accounts? Did you get a distribution, gift, or inheritance from a foreign source? And so as the IRS was trying to develop things, they actually helped FinCEN run some of these compliance things on the income tax side. There's no form you file for this. It's all a separate online registration and reporting, and that's done within FinCEN, FINCEN.gov.
So if I understand this, FinCEN is under the Department of Treasury, just like the IRS, and they're gathering information on basically who owns these LLCs and reporting them up. And maybe Brittany, give a little bit of overview of at CTA compliance. What's the information that people are going to be providing to FinCEN?
So the required information is being tracked or reported on the company level and then the beneficial owner level. So on the company level, it's the company name, EIN, address, and then you report your beneficial owners. And the information that FinCEN is collecting on each owner is legal name, address, birth date, and then a copy of your identifying information. So that is either your driver's license, a state or tribal issued ID, or your passport. So you have to put that information in there and then as well as upload a copy of that document.
So maybe a little bit more into that. I'll start with this because I'm assuming I probably have several clients that are going to say this. I just don't want to do it. What if I just don't comply?
So there are some pretty strict consequences to not complying. So failure to file a required BOI, there are criminal and civil penalties. So criminal penalties of willful failure to file is a penalty of up to 2 years of jail time, and civil penalties are fines of up to $10,000 per violation.
Okay. So you've convinced me now that I probably should file. And we're going through this process, and CTA compliance is going to help me or help our clients file these forms and stay compliant because I don't want to go to jail. And I'm hoping that case in, I think you said Alabama or Arkansas, will finally make it through. But until then, I need to comply. Let's go into some of the aspects of CTA and give us the definition. You keep on saying beneficial owner, BOI. What is the definition of owner, and who are those people that have to report?
Sure. So there are reporting companies, and some companies are exempt from this. So the key factor in determining if your company will have to do a BOI report is whether or not you had to file a document with your state's Secretary of State or a similar office to create your company. So if you had to file with the state to create your entity, then you are most likely a reporting company required to file BOI. There are 23 exemptions that FinCEN lists out. These include publicly traded companies that meet specified requirements. Many nonprofits are exempt. And then certain large operating companies. So there is a list of 23 exemptions that are completely exempt from filing BOI reports.
I was going to say, I tried to just not file, and then I tried to be exempt, and I'm 2 strikes now. So now I've decided I need to file. Give me an overview of what needs to be filed, who needs to be filed, kind of just some of the basic info.
So once we determine that you are a reporting company required to report, then we look down at your beneficial owners. FinCEN lists out 2 types of beneficial owners. You can either be a beneficial owner who exercises what they call substantial control, or you can be a beneficial owner by owning or controlling at least 25% of the entity. So there's 2 buckets that we can look at. So really the easier one that we're looking at is the ownership interest. If you own 25% of the interest in that company, you are a beneficial owner, required to be reported on the BOI report. On the other side is being able to exercise substantial control. This is a pretty broad definition under FinCEN. We're getting a lot of FAQs issued by FinCEN kind of narrowing this down. But as far as we know right now, substantial control would be any individual who's a senior officer. So that's typically a lot of your C-suite employees, your CEO, CFO, president, vice president, those officer type titles that have control over the company, as well as anyone who has the authority to appoint or remove officers or a majority of the directors. For example, the board of directors, if they have the power to appoint or remove, then they would have substantial control as well. And then the overarching definition that FinCEN added in is any individual who is an important decision maker. Very open-ended definition there. Important decision maker. So really, we're just looking at anyone who has real control, can make very important decisions over the company.
Some of these sounds like are pretty bright line tests, like the ownership and stuff like that. But then you have a lot of subjective pieces here on who qualifies in those different areas. And we have clients all over the country, but then we also are mostly housed in Idaho, which is a community property state, and married individuals. How does that impact the reporting requirements as well?
That's kind of one of those nuances that we want to make sure we point out because most people don't realize that will affect this. If you are a resident of a community property or marital property state, your spouse will have to file under BOI as well if you are under the ownership interest portion of BOI. So if you qualify because you own over 25% interest in the company and you reside in a marital or community property state, then through that your spouse is deemed to have owned that same percentage in the company. So they qualify as owning essentially the same portion of the company as you do.
So that's when you own a significant percentage. If you are just in like significant control but don't own a percentage, then it's not your wife or husband don't qualify under that, right? Is that how I understood you?
Correct. Yep,
Okay.
correct. On the substantial control side, the marital property, community property does not apply because you don't own that percentage.
Perfect. David, is there differences in some of the deadlines for your entities? You know, old entities or new entities? Is it changing? Can you give us a little overview of kind of the deadlines of what we have to do this?
Yeah, outside the inactive status, but any entity that's existing into 2024, currently you have until the end of the year 2024 to get registered. If you start a new entity in 2024, it's my understanding you have a 90-day period in which to get that registered. And then 2025 going forward, I think you're down to 30 days if you set up a new entity to get registered. And one other thing I might throw in there is that if you have any changes, whether you have to renew or a license that you uploaded or you moved, then those timeframes become in those same areas as I understand it. Maybe Brittany could add a little bit more to that, but as I understand it, you need to do that within those timeframes as well to make sure that your records are updated. Otherwise, that penalty could kick in as well.
Correct. Any changes to any of the information that is uploaded will require a change report on top of your initial report. And that's going forward indefinitely at this point. If there are any changes, you're required to file a change report. And that's due within 30 days of the change.
Interesting. So last question here, just on some of the key items. And I know there's a lot more that goes into it. That's why we're partnering with CTA Compliance for our client to kind of help them get through this. I set up a new LLC in March of this year, right? And I used a lawyer to help me file all the paperwork, right? Is there something related to information I have to put in about them as well? Like, how does that work when you have someone else set up an entity for you?
You are required to report company applicant information only on entities that were created after January 1st of 2024. So any pre-existing pre-2024 entities are not required to report company applicants, only new entities in 2024. The reporting of the company applicant is twofold. Up to 2 people can be reported as a company applicant. It's the direct filer and then the primarily responsible filer. So if the CEO, owner of the company, directed the filing, provided all the information, was primarily responsible for the filing, but then directed a CPA or an attorney to file the paperwork for them, then that CPA or attorney, or if it was a paralegal or whoever within your company, actually did the filing with the state, submitted your articles, set up the company, filed it, they would be the direct filer. So their information would also have to be reported on your BOI report.
That seems like a lot of reporting, Brittany.
Yes, it is. Lots of reporting.
It's a good thing we have you. Go ahead, David. Did you want to say something?
Yeah, I wanted to know if we could maybe follow up on the single member LLCs a little bit and maybe get Brittany's input on that, because we have a substantial amount of clients who are in single member LLCs. And I'm thinking more like rental real estate, where we use the address instead of the LLC name and EIN because it's not required to be on that tax reporting. What's a good way to handle that, or can you help clients walk through those specific scenarios and needs for compliance?
Yeah, I think we've already started having this conversation with some clients and looking at this, especially from a Schedule E or Schedule C standpoint. Some of these are actually determining, did you actually register this as an LLC? Did you set it up with the state? Or is it really a sole proprietorship and all you did was get an EIN number? Just because we have that EIN number in there doesn't mean that you ever actually set up articles, you ever registered with the state. So I think that's step one, because if it's just a sole proprietorship and you just got an EIN, you never registered it, that is exempt from reporting under BOI.
Cool.
So
That's-
yes, that will
Just-
make
I
a
think you
lot of
just
people
made-
happy
I think you
on
just
those
made,
proprietorships.
I think you just made David's day there, right? So
Never registered, to do business with the state, never set it up, never filed those articles or anything, then you are off the hook.
awesome. So I appreciate, Brittany, you coming on. We do a bunch of different topics when it relates to our podcasts over the last couple of years, but this is one that, I think across the board is pretty pointed to a lot of our clients and a lot of the people we work with and people in the community that listen to this. So trying to get the information out to them. We have decided as a firm that we needed to bring in some expertise, which is why we partnered with Brittany and her group at CTA Compliance to help our clients do that. Luckily for us, it sounds like, Brittany, you guys use FinCEN, which is the same kind of software we use with our clients. And I guess the process here as we go forward to help people comply is we'll be getting the information of those who reach out to us and say, hey, I need help complying over to you. And you'll be sending them engagement letters and request lists and kind of starting through that process to help them get registered and comply and do the filing with FinCEN, correct?
Correct. Yes, we use the same SafeSend signatures program. So once we get information from Harris, we can reach out, send over the engagement letters, send over the information request to get all the information that we need.
And I think, David, we have a lot of clients and we want to be here and be a resource for them, but CTA Compliance really knows what they're doing. And so the more we can help connect our clients with Brittany and her team, the more we can get the information over there, the better we will be. We do have a timeline here. It's already May 1st or May, and we got till the end of the year to try and get compliant with the FinCEN rules or with the Corporate Transparency Act rules. So I know we're going to be starting that process and really pushing communication. We have so far this year, but it's really going to pick up here as we go. One last thing, I had just a note here. What if I'm a client of David's and I've got 20 entities that all require FinCEN reporting requirements? Do I have to do this 20 different times, or is there any tips you got, Brittany, for people like that as we go through this process?
Absolutely. We've got some tips for those multi-entity owners. You do have to file for every single entity, but there is a thing called a FinCEN identifier number. This number, it's a unique identifying number that's issued by FinCEN for each individual. So it's not required, but any individual can go on to fincen.gov and request for a FinCEN identifier number. The exact same information that is required on the BOI report, the legal name, birth date, address, driver's license copy, is what you upload to get your FinCEN identifier number. Then once you have that number, in place of all of that information on each BOI report, we can insert that individual FinCEN identifier number. This cuts down on time, and it also cuts down on those change reports. This is kind of the big silver lining of using a FinCEN identifier number. If your owner used a FinCEN identifier number on all 20 of those BOI reports, and then next year moves, gets that new driver's license, new address, has to file a change report, that owner can just go onto their FinCEN identifier number account, put in that information, and then it automatically links to all of those BOI reports. We are not required to file 20 change reports next year for that change then. Huge silver lining there in getting the FinCEN identifier number.
Awesome. That was a little bit of a leading question, but I know we have a lot of clients that are interested in that. And maybe might not help in the initial year, but I know in future years, if there's a ability to make that one update, that will be a lot easier than making all of them. But I do appreciate both of you jumping on our podcast today. I tried to stay as much out of the political realm of Corporate Transparency Act as possible, but we'll follow the status of it. But currently, as it stands now, right, it's there. It's got some significant penalties. If we don't comply, it's something that we need to comply with. And we just need to help, our clients. We really appreciate the relationship we have with CTA Compliance and the expertise you guys are going to bring. And so we'll put, Brittany, kind of the CTA Compliance info in the notes to the podcast so our clients can see it. But then also, I know David has been fielding calls, and we all have it here at Harris that if our clients need us to connect them to you, we have a process in place for that too, so that they can start to get in compliance and get ready. So by the end, we're compliant and rolling forward to the next year. So I appreciate it again, you guys hopping on the podcast. It was great talking to both of you.
Thanks so much for having me, and looking forward to touching base with a lot of you this year.
You bet. Thank you, Josh.
Thank you for listening to Harris CPA's Accounting for Tomorrow. Stay tuned for new episodes each month. Podcasts are also available on our website at harriscpas.com/podcasts. Any accounting, business, or tax advice contained in this podcast is not intended as a thorough, in-depth analysis of specific issues, nor a substitute for a formal opinion, nor is it sufficient to avoid tax-related penalties. If you'd like, Harris CPAs would be pleased to perform the research and provide you with a detailed analysis of your specific situation.